It seems like Kraken came up a lot today at this conference. The partnerships that you're doing. Just yesterday, Nasdaq said it'll partner with the parent company of Kraken to design a gateway for tokenized equities to move between regulated markets and on-chain markets.
That's right.
What does this look like in practice?
So, well, the partnership that we announced is that we would partner with them on 24/7, 7 days a week, 365 trading. And if you see TradFi in general for commodities, equities, they've been trying to move in this direction. Crypto, by nature, default is already 24/7, 365, 7 days a week. So a lot of what we're talking about here is just bridging our infrastructure around what we think about in DeFi and centralized exchange for crypto, and then bridging the gap between what we see in traditional equities. And so we're going to help bridge that with themselves and a bunch of other partners.
You're also bridging the gap with traditional finance and with regulators in a really interesting way. Earlier this month, you were awarded this limited purpose account by the Federal Reserve Bank of Kansas City. So you're the first digital asset bank to gain direct access to the Fed's payment infrastructure. You said in a statement, we can operate not as a peripheral participant in the U.S. banking system, but as a directly connected financial institution. What are you going to do as a connected financial institution?
So I think first and foremost, when you take a step back, trust is the only currency that really matters for our customers and clients. And we have clients that operate all over the world, and they are also from all over the world. And what they really want is the ability to store their assets somewhere. They want yield on it in some capacity, depending on what the asset might be. They want to send and receive it, and then they want to be able to trade or cross-margin that collateral, depending on what they want to be in. And so, in practical terms, it means like I want to be able to be long Tesla, short oil, or vice versa. And so I'm using that in just like layman's terms, but there's just so many different assets, multiple products that you want to get access to, especially if you're an institution within the United States or outside the United States for risk management. Being a part of the Fed system just gives access and more control for risk management for our customers around different windows and where their collateral can sit. And so our SPDI in Wyoming is a fully reserved bank. We don't do any lending. We don't take any credit risks. So it's really about collateral movement on behalf of our clients.
Do you think we'll see more crypto or crypto-adjacent companies get access to?
I hope so, because I think a part of this is that there's more regulatory oversight.
And banks don't love it.
That's right.
They don't love it.
Yeah. Well, I mean, part of it is like we are an SPDI, so we're getting closer and closer to how banks operate. I think in the U.S., let's take a step in where banks have been for a long time. They've been used to a very specific way in which they've been able to make money. And it's off of, customers' deposits. Outside the United States, banks have been used to making money in different ways and innovating in that way. And so I think it's more you're seeing a collection of they're getting hit by innovation outside the United States. Like a bank like Revolut, or a bank in Mexico and Colombia. They're able to do payroll services, benefits, payroll advances, something that our banks don't do yet today in the United States. And so part of it is they're getting pushback from so many different constituents, including crypto companies. I think they're getting hit by all sides, and they're trying to figure out how to innovate moving forward.
Speaking of innovation, another partnership, I mentioned Nasdaq, but there's also Deutsche Börse. You announced that partnership back in December to create unified access across traditional and digital asset markets. What other partnerships should people be on the lookout for? What's in the pipeline?
Look, so Deutsche Börse, traditional exchange, it's a unified system, it's vertically integrated, collateral plus lending plus trading. Nasdaq, obviously an exchange, and they, obviously operate in some of our largest capital markets today, just in the United States. I think the way to think about it is, we've said before, we want to bridge the gap between traditional finance, which is what we're used to, and what you see in crypto. And so BTC, ETH, people have been growing up thinking about what it means to have, stable coins or collateral that's able to move efficiently and quickly. And we've seen the advent of meme coins, et cetera. So we can make fun of the toys, but what it's really allowed us to do is have global liquidity always on and have a risk management solution that's actually quite safe. And then you say, okay, great, well, how do you match that and bridge that with traditional finance?
It wouldn't be an interview with you on Bloomberg Crypto if I didn't ask you about your view of Bitcoin right now, just very quickly. How has it performed with all this macroeconomic tension, with the stress? What's your view?
Look, I think we're in like a deleveraging moment in the ecosystem. And so when you have leverage taken out of the ecosystem, pricing changes supply and demand. That's really what you're saying.